You're watching SmallCapSteve Live. It is Friday, February 26th. If you're watching this on YouTube, please hit the like and subscribe button. We're super excited. Today we have Emily Paxhia from Poseidon Asset Management, who's pretty much just been killing it with a bunch of early stage investments and cannabis operators, both in Canada and US, and hey, even GW Pharma. So she's hit a lot of home runs. So we're really excited to have her on. So let's get buckled up and get started. Emily, thanks so much for joining us today. We're super excited to have you.
Thanks so much for having me. Happy to be here today.
Where to get started here? I spoke with Jay briefly. We're generally in the morning just going through all the news in the Canadian small cap and cannabis world. But Jay brought up just the beginnings of how Poseidon got started. Now, I kind of gave a little bit of an intro there, but how did you get started investing in cannabis companies back in, was it 2014?
Yeah, we put together our fund over 2012, 2013 and launched it in January 2014 when Colorado was opening its doors to adult use. So it was a couple of things. I mean, my brother is my co-founder, and he's a mastermind. If you haven't met him, he's one of the smartest investors I know. But he and I just realized that, I mean, we had a background that made us, I think, more open to it, in that both of our parents had passed away from cancer. And so we'd been introduced to the concept of cannabis as a palliative care resource. So I think it just gave us more open mind to take it seriously, which is in the end a real blessing, because we did. And then we saw what was happening in some of these elections, with Colorado voting for, in 2012 is when they voted for adult use. And we also saw that Canada was going with a full federal medical program. And so for us, it was like, I remember where I was when I called him. I was actually right by Haight-Ashbury in San Francisco. And I called him and I said, I think this may be the opportunity of our generation. And it was him that thought of the actively managed fund structure. The industry would need to be funded, and investors would need people who were focusing their energy on it because it was so early at that time.
So I kind of want to start right there. So you say you called him. So did you have a background in financial markets at all, or was that primarily him, or where did that come from?
Right. So I had a background in research and consulting. And so my entire career before that was based in psychology, which is, anyone who tells me that psychology isn't totally relevant to investing is not paying attention to how markets move and how investors make decisions and how founders function. Psychology is 360 degrees aspect of being an investor, especially at the stages we are. But so I had a background in that, and I had also been consulting with companies, you know, American Express, Ralph Lauren, PepsiCo, all of these companies that were in highly competitive spaces, constantly trying to find white space opportunities. And when I thought about cannabis, all I saw was white space. It was completely unaddressed in terms of where it needed to go to become where it is today, which is really a consumer category, and pharma too. But that's another story we can get into. But that was my whole background. So it was my thesis that I could be a really great resource to understand what was going on in terms of building companies and the opportunity spaces where businesses needed to be built, and brands, frankly, which really we haven't gotten anywhere near where we're going to go with brands in this industry. But Morgan was the one with the traditional finance background. But, you know, I mean, I had spent, you know, a bit of time studying finance, and then I just pulled myself up on it. I studied, you know, venture capital, and passed my Series 65 in one go, and just went for it. And so it's been an incredible opportunity. I have great mentors, and my brother is one of them. So.
Okay, so what were the first investments you guys made as a fund?
So GW Pharma was our first position in the fund, January 2014. And then because at that time, you know, it was really early days. And so we were in some of the early names in the public markets. As you can imagine, there was like a really different time. But other early names we were in was APHA And that was private before it went public. And we were also in some of the early Canadian LPs that ended up becoming a part of Canopy Growth Corp. We were in Canopy Growth Corp. I remember having, back when it was Tweed, I remember having an email exchange with Bruce Linton in 2013, before we officially launched the fund, where he was like, "Oh, there's a cannabis fund being formed by Haight-Ashbury in San Francisco. Let's talk." I mean, Bruce has always been very clear on, optics and what drives a story, and I think he thought that was an interesting story. So, but we grew up in Buffalo, New York, right across the river from Niagara-on-the-Lake, Canada, and so we were very familiar with what was going on in Canada and the Canadian landscape, and kind of felt like we had early exposure to Bay Street from our colleagues and friends who are up in Toronto and understood some of the dynamics up there. And so we were early in some of those names too. So
you largely source the early investments in the likes of, sorry, my camera's not focusing. The early likes of APHA and all that was solely just from contacts you already had. One of my biggest questions in PE is just where you source your deals from largely.
Oh my gosh, it is so much about the connections that you make and working through trusted networks. Some of the best deals we've found have been brought to us by founders that we already like working with. I think that good founders attract other good founders. They spend time together. They hear about what each other are building, and they just set us up and connect us. And it's also just about time in the space. We just spend a ton of time. We spend all of our time in this space. And when it wasn't a pandemic, we were always on the road. At Poseidon, we have a philosophy or a hashtag that we use. We say hashtag take the meeting, because you never know what one meeting will lead to. Maybe that's not the investment you end up placing, but maybe you make a connection that down the line you end up placing an investment adjacent to it because of a connection you met in that meeting, or an investor you met through that meeting. So it's all about working the network and just being in the market and spending the time. The reason, for example, that we knew we wanted to jump in on something like APHA is that we had been really studying the dynamics of what we thought was to come in the Canadian market. And they were focused on high quality, low cost production. And they had done it already with like mums for Lowe's and tomatoes. They were in Leamington, Ontario in these greenhouses, and they really had figured out how to cultivate and preserve margin. And frankly, that's a story that hasn't really played out for most of the Canadian LPs. And it's something that's proven to be really critical here in the US with the MSOs. But that was our early thesis on investing into Canada. So it was about the connections, but it was also about having an established focus in terms of how we thought about deploying capital into the sector.
So you guys saw Canada play out. Was there a point where you guys just said, this isn't going to happen, this isn't working, we're going to exit our positions? Or are you guys still in Canada?
We're not so much in Canada right now. We rotated our position into the US, I think right around 2018. I remember we did top tick on a couple of our positions up there, and thought when we saw the multiples and we didn't see, that EBITDA was coming anytime too soon, or that free cash flow was coming anytime too soon, we started to rotate back into the US sector. And it was mainly because the cost of the entry point was lower, and we could get further with our dollars. So we thought we had, we'd already seen massive returns on our initial investments in Canada. And so we just thought it was time to take some chips off the table there and rotate it into the US and start establishing our investment thesis in the US now, as we started to see what is now considered the MSOs. Like we were investors in GTI when there were 30 people there, and they weren't yet a consolidated organization, and the term MSO had not even been invented yet. And so that was early days, and it was about believing in teams and believing in companies that really thought they could get these businesses to demonstrate that they have great value. And now when you look, I can't stop talking about this because it's so exciting to me. When we were first in the space, there was really, Alan Brockstein was like the analyst of the industry. There weren't many analysts looking at this sector. Now we are lucky, we have many, many more. So investors coming into the space have a lot more research reports they can look at. And I'm really impressed. The city guys have been doing comparisons of cannabis to other high growth consumer segments, and the EBITDA that we're seeing in cannabis, and when you consider how difficult it is to run a cannabis business compared to like a Beyond Meat, it's really staggering. And yet our EBITDA is so much more attractive as a segment, as a sector, I should say. And so I'm loving these comparables that we're getting, and it's just proving out the business case that cannabis is really an industry that's worthwhile to invest in.
So I know Steve has 10,000 questions on the MSO thing. So I before he gets into that, one thing I want to ask about is Fund One. You note that you have investments in Canada and the US, but you also have investments in Latin America and Europe. I kind of want your take on the situation in both of those markets, Europe and Latin America, where we heard about them a lot early on, but they've already seemingly died off in favor of the MSO story.
Look, money's moving where it's treated best. And right now it's much easier to access information and to understand what's happening in our backyard in the United States. And frankly, I'm a little bit excited that there's so much pride around building an industry here in the US, because it is bringing jobs, it is bringing tax revenue, and we need that. 2020 was a rough year for everyone globally with the pandemic, but I'm excited to see that kind of, it thrust behind building US businesses, because I'm from the US. But we are big believers in how this is going to play out in the long run. And for us, especially on the medical and pharma side, we do believe that cannabis is going to be kind of deconstructed into active compounds and molecules that will be used in formulations, whether they're whole plant formulations or whether they're derived and then implemented into other formulations, remains to be seen. But cannabis in that way is almost like an ingredient, an active ingredient. And so when we think about that, then we think about it's got to be extremely cost effective to produce, to manufacture, and it also has to flow through a certain level of regulatory oversight. And for us, it's GMP, it's EU GMP. And the way we think about this is that Germany has established that, right? They said, if you're importing cannabis into Germany, it has to be through certain protocols and it has to follow EU GMP standards. And we think that Germany has done a good job of establishing a framework around that. It's still very fragmented and not functioning very efficiently. But when we look at the cost structures of what this means, to us, Latin America is a very interesting place to play in that. So you have Clever Leaves in Colombia. They have an incredible set of facilities down there, incredible team. And they're cultivating and processing at a place that you can't compete with in the US or Canada, or frankly, almost anywhere in the world. And then they have an outpost in Portugal as well, which I had the privilege of touring, which is incredible. And they brought over a team from Driscoll's Berries who knows how to do these things at scale and through a very traceable system. And I think there's a lot to that in terms of feeding this global medical infrastructure. And then our other investment is into Mexico. And it's actually a 20-year-old company that pivoted into researching cannabinoids over the last few years. And they have IP around it, and they're planning to participate. And I could see that there would be maybe some partnerships there. But again, it's about manufacturing these products in a place that's much more cost effective than in the United States. I love the US for the THC side, for all of the things that's being built there, but then you just have to be realistic about the cost of doing business and what really will create margins and real value down the line. And for us, that's how we think about playing in this global medical infrastructure, if that makes sense.
Do you foresee items such as biosynthesis of cannabinoids as being a threat to jurisdictions like Latin America, where the whole premise is low cost production?
Well, for us, we're not really, well, okay. So the cost to produce in Colombia is like 50 cents a gram or something. It's like so low. And think about it. They have the natural light cycles, being an equatorial country, or basically an equatorial country. So it is so cost effective. And so far the jury is out on the biosynthetic effectiveness or efficacy of the cannabinoid compounds that they're deriving. So for the time being, we're very interested in the phyto-derived cannabinoids and participating along that side. And yeah, maybe in the long run that becomes a real competitor, but for now we're pretty strong on this position. I think we have a few years before we get there. And you can see there's been a lot of capital put into these biosynthetic companies it's more of like a biotech play, and you have to play those for a very long time, and you have to be comfortable going through wild gyrations as they go through their trials and trial and error. So for us, it's like we feel actually, and it's actually almost counterintuitive, because you think anything you can kind of grow in a lab that you can make sure you're consistent on. And that's the whole thesis of biosynthesis. And I think there's something to that. But right now the plant is as a known entity, and and you can kind of ride on that for now.
I'm fascinated by your investment in Green Thumb because obviously this is an investment that is, I assume, life-changing for you guys. When you walked in there and you first started doing your diligence and looking at making this private investment in Green Thumb, were there any sort of like characteristics about it that you think, if you were looking at private equity, that you would say, like, if we see certain, like, check marks that this is going to play out really well, where you just like instantly like, we have to invest in this? How did that go early on, and what did that investment decision making framework look like for looking at investing in Green Thumb early on?
Yeah. So we were co-investors with their CFO, Anthony Georgiadis, on other projects. And so we had worked with him on these other companies and really got to know how he thought about the industry, got to know how he worked and what it was like to work with him. I remember him calling me. We're on the West Coast and he was in Tampa at the time. And I remember him calling me. It was like 5 a.m, which I'm always up working, but I'm not always on the phone. And he called me up. He's like, we got a problem here. We have to talk about this. It was a manufacturing, a product company. And I remember I picked up the phone and he was already going at like 100 miles an hour. I was like, who is this guy? He just called me up because he knew we were, on the cap table and that we were pretty active in the company. And I just immediately I liked the cut of his jib. I liked the way he approached it. And I feel like, and it was just it was almost like one of the longer diligence processes of just talking with him about what they were building. He was like, I've come together with these guys who we now know as Ben Kovler and Pete Cadens and Andy Grossman. And I love all of them. And I just think that they were always focused on the long view, which is what we've been focused on. It's always been our belief that if we build great businesses, it will drive excellent returns for our investors. And we're invested in our funds right alongside of all of our investors, and have been. Like, our dollars were our first dollars in. We were not backed by a lot of people. And it's something to be said for you bet your whole life on something. And that's what we did with our first fund. And so just knowing the team and knowing how they thought about it, and that they thought, we're going to build a real business in this industry. We're not in this for a short in and out. We're not in it to ride these frothy cycles that we've seen in the early days of cannabis. We're in it to build businesses. And, Ben had the point of view kind of based on his family background of, what comes after Prohibition. When you look at the ways that history rhymes, like what happened after Prohibition with big alcohol, it wasn't big alcohol, it's big alcohol now, but it's like, it's kind of it's an analog. And so it really resonated with us. I mean, the thing we like about cannabis is that, unlike alcohol, it really does have wellness benefits to it. So it's like a much bigger picture story, but that's why I will say at the time we were really nervous. We didn't know how these companies would really be able to come together across state lines in the US and make it work. And not that there's any interstate commerce with these companies, but even then, back then, it was a foreign concept to think about bringing one company together that was serving all of these different markets. And it seemed like an absolutely daunting task, because not only are you a retailer, but you're also so you're in farming, you're in manufacturing, you're in distribution, you're in brands, and you're in retail. You're in like 7 businesses in one if you're an MSO. And that's, at the time, we were very nervous, but that's when people say you invest in people, that's what it's about. You invest in people because you think that they can get through whatever is so very difficult in building these businesses. And GTI, the team, it was all about the team.
They seem pretty sophisticated from just some of the stuff that I saw them doing. I remember them making that 1-year loan to Ianthus so that they could close their Florida acquisition. They just got a ton of warrants and presumably blew them out at like a massive gain. It was
a good deal.
Yeah, obviously with just how the general business has played out, they're real operators.
Yeah.
Which kind of brings us to sort of another good question, which is, when you're diligencing, I'm sure you guys look at a ton of companies. Mm-hmm. How do you know which jockeys to back?
Yeah, we definitely profile the qualities of the founders. We're founders ourselves, so we also kind of understand what it means to build a business from scratch and everything that you put on the line to do it. what we've learned over the years, because look, you don't bat a perfect at bat when you're an investor. You make mistakes, and what you do is you learn from them. We debrief after everything so that we can really learn. And so what we look for are founders who are very ambitious. You have to be ambitious, and there's like you have to have a little bit of craziness to think you're going to build a business, especially in the cannabis industry. So we are very accepting of that fact. But the thing is, we also are very specific about humility in a founder, and where that humility comes into play is that they know that they have to build a team around them that has the strengths where they lack. And you can't identify your own areas where you need support if you don't have a little bit of humility. And I think that that's played out really well for us, because in general, when investing goes wrong, it's because a problem wasn't addressed early enough. And we need our founders to always come to us, especially because we sit on the boards of multiple portfolio companies, but we're also active investors, and we're also really connected in the space. So we always say, come to us the minute you have something that's not going right, because that's when you can fix it. When you can't fix it is when it gets too far down the road. And that the only companies that we've had that have truly gone to zero have been because a founder the hubris blocked them from the reflection that they needed in order to course correct and seek the help that they needed in order to make it better. Because problems in business will compound overnight if you don't take care of them. So that's what we're for.
Sorry to cut you off there.
No.
I want to take the other side of Steve's question. He's talking about getting in. So how, in terms of private equity, how do you plan your exit strategy? Do you plan it the second you make that investment, like so many big investors claim they do? Or do you go, hey, I'm going to ride this, maybe they go public, maybe they stay private, but they start generating cash flow, so it makes sense to keep them? How do you initially intend to do that? Because I think only 20% of your investing companies that have gone public so far, if I'm not mistaken.
Yep. No, I mean, our companies have gone public. We've received dividends. Companies have been acquired. Like one of our companies was acquired by APHA, which is now a public company. And so now we've exited, from that was a transaction where that worked out, and so there are different ways you think about it. It is critical because our funds do have a lifetime. And so, venture capitalists receive a bad, it has kind of a negative connotation or a pejorative term. And I think it's because I usually think it's actually because of misalignment. And so when we are investing in a company, it's actually one of the first parts of the discussion we have with them is to make sure that the timelines fit, because otherwise it's inherent misalignment from the beginning. And so for us, it's always a part of the initial conversation, like what is the exit plan for this business? And that's how you know if it's a good relationship. And, I have given feedback to founders where I'm like, look, I just don't think this company is for a venture capital firm to invest into, because you want to run this company for the next 20 years. And unless you can think about how to dividend them out, or maybe you structure it as a note, there are ways to work around that. But if we're trying to hit at least a net 30% IRR, and that's a bogey that you have to work hard to do. And you have to think about how you're going to achieve that. And so time is an important part of the equation there. So we have to be very mindful of it. So in our investment process, we do go through the exit opportunities. And a lot of times, we write deal memos because we keep track of everything and we update them as we go. So we can it's part of our debriefing and understanding how our investments are going. But one of the sections is about exit opportunities. We write a lot about risk factors. We write a lot about exit opportunities. And sometimes the founder will say, I'm going to IPO. And we will sometimes say, okay, yeah, that's an opportunity, but what are the other ways that we believe that we could achieve an exit? Maybe it's through acquisition of private equity, when private equity really starts to get into the space, like big private equity firms that take out the whole company. Maybe it is through an acquisition of either a cannabis company or maybe not a cannabis company, maybe a consumer company or an institution. So there's other things to think about. And then maybe it is really an IPO opportunity or a SPAC. SPACs are now a real thing. I mean, I was on the board of MTech, which acquired Akerna, or which became Akerna. And there are lots of SPACs. So there's many ways to think about it, but it is a key part to it because we do not have the luxury of just leaving things open-ended. We don't, because the people we answer to are our investors. That's who we have to work for.
So let's talk about the regulatory path here for a second. I'm not going to ask you how you see it playing out, but let's talk about risk when you're investing in like a GTII or an Ascend Wellness. What do you think the biggest risks are for how the regulatory path could play out when you're investing in MSOs?
Okay, yeah. Thank you for giving a shout out to Ascend. I love that company. My biggest risks are actually, I'm a little bit, I'm watching carefully to see, we have political consultants at the federal level. So we're always watching what we think's going to happen. It used to be that the biggest risk was that the industry gets shut down. And frankly, last March, before we got the essential designation, that could have been a point where regulators used it as an opportunity to like shut this industry down. If they had closed us, there wasn't a lot of capital flowing into the space. We had just come off a bear market. That could have been a really bad time for this industry. Things that concern me are a rescheduling of cannabis. If we chuck this all into a Schedule II, then we're talking pharma, and that is not good for this industry. This industry in the US is not built for pharmaceutical regulations. It's just not. And that would scare me. I wouldn't like it, and I don't think it would be good for the consumer. I think there are great regulations state to state that are protecting the consumer. Some states do it better than others. Like in California, we have extremely strict testing regulations because they want to make sure the consumers aren't getting anything that they didn't anticipate. And you know where that played out was when VapeGate happened and everybody freaked out and the media totally blew it out of proportion. But what we learned is that was all illicit market stuff. And so it wasn't things that were running through the regulated and tested market, which is a great testament to regulating this industry. So that's actually the thing that concerns me very much. I'm concerned about a broad bill that regulates or that legalizes cannabis in the US, but does not contemplate the business implications of it. And so a lot of us are trying to make sure we have a voice in Congress and in Capitol Hill, so that we can educate about how we should keep this business going forward and not just opening the doors to this and not contemplating any of the unintended consequences of that. So those are the two things that actually concern me, is like misunderstanding at the federal level about how to legalize cannabis, if that makes sense.
Okay, let's take a question here from Mr. Betting Bruiser. Who would you consider the best CEO of all the publicly traded MSOs?
Oh, first of all, I have to give a shout out to Betting Bruiser because he's like running the Twitter game pretty hot these days. I know he made the connection here, so thank you.
Yeah, he was the one for our audience. He was the one who suggested we reach out to you, and then when we looked at your background and you agreed to come on, we were like, wow. So yeah, it was we owe that to him.
Yeah. Oh, it's tough to pick favorites. I'm a big fan of Ben Kovler. I'm also a huge fan of Jason Wild, and in the public right now. And of course, I cannot, not give a shout out to Kim at True Leave Kim Rivers, because she's doing her thing, and I give her a lot of credit for that. So those are, can I pick top three? But those are my faves. I mean, just from like people I admire who are running MSOs. And I know Jason, well, Jason's not technically the CEO of TerraSend anymore, but Jason Ackerman does a great job there too. And I think it's really smart that Jason brought him in given his background in consumer. So I think that was really smart. But I don't know, someday I'm hoping Kim and I can go on the Blonde Ambition tour and do some.
Does it annoy you, or do you embrace it when you go on shows and people ask you questions about being a woman in business, a female in business? Is that like what's your sort of thoughts on when you get asked those kinds of questions? And the reason I ask is because you're probably the first female we've actually, I think, interviewed, and that's there's just not many high-ranking females, and obviously we'd love to have Kim Rivers on the show. She's a rock star. But what's your take on being asked those questions? Do you like it, or is it kind of like annoying?
No, I mean, it doesn't annoy me at all. I mean, I am a woman. I'm in finance and cannabis. The cross section there's like, you look to your left, you look to your right, and it's just a bunch of guys. But there are women. I mean, there's my friend Tahira. She's like an amazing. I mean, we're friends because of our mutual respect for each other from a professional level. And same thing with like Rosie Matteo. I mean, there are some amazing women at the top, but there aren't that many and we need more. And, I'm trying in the organizations and the boards that I serve on to bring more women to the upper level management. Again, I always get frustrated when a pitch deck comes in and it's like all men. And then it's like head of HR is the female. And I'm like, why is that? Why can't it be anything else? So I don't know. It doesn't bother me to talk about it. I try not to just do just women events though, because I don't want to be in a like female cul-de-sac. I want to be integrated. I want us all to be together. And I think that women are great contributors to the whole conversation and to really moving this forward. And, I've been in meetings with Kim, for example, and I just find her incredibly thoughtful about how she manages and runs her business. And I think there are a lot of really thoughtful women who could be more at the table. Wendy, who's on the board of GTI, is an amazing person, and I'd love to hear more from her. I'm totally in awe of her, but I think that I'd love to see more women, but I'm always happy to talk about it.
Okay. So Brian here, he was chatted with Brian on the phone last night, and he's like, you got to ask Emily about Copper State. You got to ask her about it. So what can you tell us about Copper State?
Ooh, Copper State, that little smoke show. It's like 1 million square foot greenhouse in Snowflake, Arizona. Copper State is awesome. They have a massive cultivation facility. Again, kind of like our whole thesis back to the FRIA time. So can cultivate and process at a very low cost structure. And then now they've got a retail footprint and they've acquired some of the wait, I don't know what I can talk about there. They've opened more doors and they're planning to open more doors. And I'm very excited about it. I like their branding. It's called Soul Flower, I think. I'm very excited. I want to get down there and see it. But we love Punkage, the CEO. And the way I would say that, I think any single state operator that's building an efficient operation that could be accretive to an MSO, my guess is that they're a pretty hot ticket for an acquisition target. And my guess is also that they're probably getting phone calls from SPACs. And that's the whole thing about we're calling them like WSOs now, the Western state operators, okay. Is if you're building these deeply vertically integrated companies and you're also establishing your own brand, your private label brands and your retail footprint, and you can cultivate cannabis pretty cost effectively in the Western states through greenhouses, or even like our operator Spark in California is outdoor cultivation. You start to get really attractive to the MSOs who are trying to expand their footprint, but not doing so, at a great cost. When some of the mistakes we've seen are when companies have acquired, cash burning entities at high multiples, and then they have to kind of reconcile what that has done to their balance sheet and to their growth. And so now I think they're all going to be looking for accretive opportunities. So I would put Copper State right in the mix on that. That's just what I know about the MSOs and how they think about things, how SPACs think about things.
Let's talk briefly about your home state, New York, Western New York. The Bills finally made it back. Finally, looks like they got a quarterback. I don't know if you guys are Bills fans, you and your brother.
Josh Allen. Yeah.
I've a lot of people in my world are Bills fans. Being from Toronto, I'm a Steelers guy, but I have to root for them because it's like a lot of my best friends from high school are all huge Bills fans. So, state of New York right now, it's hardly even seems like it's a state worth considering, other than being early. But what do I know? You're the expert. What's your take on New York as a like state in cannabis?
Oh my God, are you kidding? First of all, did you know what Bills stands for? Boy, I love losing Super Bowls. So.
four in a row. Four losses in a row.
Josh Allen was my quarterback on my fantasy team. It was the only highlight of my fantasy team. Anyway, New York State, I can't think of a state I'm like, besides New Jersey, I'm more excited about New York than anything right now. I feel like, well, I also lived in New York City, and I know that it's such a cultural hub, and I know that cannabis is a massive part of the culture already there. It's, I mean, a huge creative class. There's a lot of financial resources, and besides Los Angeles, it's really where brands are built, where cool things originate. And I think that if you have flags planted in cool spots like that, I can't see how that goes wrong. So I'm really excited about it. And I'm excited because, growing up where we grew up, it, economically speaking, wasn't that healthy of a situation up there. And so I'm happy that jobs are coming back. I'm happy that someone turned Kodak's facility into cannabis cultivation. Like, I'm happy for them. I think it's wonderful. And I mean, the whole reason I invest in cannabis is because I believe that people should have access to good cannabis. And right now they don't. I mean, that market is just, sure. Yeah, you get, look, the guy shows up with the tackle box. The cannabis comes from California and Vermont. So it's not that bad in the illicit market, but it's still illicit market. People are breaking laws that they don't really want to break, but they want cannabis. So why not get them the good stuff? Why not bring it into a legal and regulated market? And back to my point about VapeGate, people are buying vape products, they don't know what's in it. And so like, let's just legalize and regulate it. And if you thought about it's like an iceberg. Here's our legal market and here's the illicit market. And it's just like, let's just bring it up. Let's bring it up to the surface. So I think it's an enormous opportunity, both in terms of being an influencer in some of the new brands and the new things we're going to see coming out of this industry, but also just to get it to a massive population and a very influencing population. Think about also people all over the world come to New York to visit. And if that could, just like how Las Vegas has been a great spot to get people introduced to cannabis, New York will be another great spot to introduce people to cannabis.
It's basically like, is anybody making like serious money in New York yet?
No. Yeah. I mean, it's not a great, until, either the medical market opens up more or we get adult use, it'll be a little bit of a tricky market, but I think that it's smart for people to plant flags there. I really do.
Yeah.
I do like this question from Betting Bruiser about what is my favorite strain, and it's forbidden fruit.
I'm somewhat surprised by that because we get asked that a lot, and we've started to avoid the question solely because a lot of the times viewers don't like the answers that are given where it's, I don't actually partake or whatever. So it's interesting to see someone actually come out and actually say that. So thank you.
You're welcome. I don't know. Anybody who's investing into this industry that's also like, I don't touch the stuff. Like, what? Come on.
It happens far more than I ever thought it would. It's mind-boggling, really.
Yeah.
But, so
go ahead, Jake.
I guess the one question I had for you was, of the private operators, who are you most excited to potentially go public that you're currently invested in?
Ooh. I don't know what I can talk about because I'm on the board of a company that I'm very excited about that I think I could see something like that happening with. Yeah.
So can we rephrase it then? If you could pick out of your holdings one company to go public, whether or not you know that they are, would that make the phrasing better?
Yeah, I mean, I'm very excited for people to have more access to MSOs and SSOs. There's capital chomping at the bit to get into the space. And so something like an Ascend Wellness Holdings, I'm very excited that they could have an opportunity to do this. And I think going public means even more than just RTOing anymore. I think it means potentially getting, doing it in a way that you can get uplisted to an exchange very, very quickly when these things start to move in the right direction. And, GTI is clearly saying this, we believe this is going to happen with their actions. They're preparing for that moment. And so I'm excited for the next wave of private MSOs and SSOs behind them. So yeah, Ascend would be in there. I don't know, maybe Copper State could be in there at some point. Also, again, on the West Coast, if you look at some of these operators, like one of the companies we're in called Groundworks has, they're vertically integrated in Oregon. They have 25 retail locations. That's big for any company, let alone a cannabis company. And they have reached into California, and you have like Spark with multiple retail locations and totally vertically integrated, this massive farm in Sonoma that's totally incredible. And yeah, I would be excited for any and all of those guys to go. Now you're highlighting some of our portfolio companies there. And I think that, a Headset, which is a data analytics company, any investor who's looking at the space, the fact that you have granular data in the way that Headset provides it in a timely manner in the reports that they put up and the presentations, like they're doing one on demographics, they do them on basket analysis, but that's a tech company. I think they have a little bit further to go, but I'm excited for that wave of technology cannabis companies that will be able to go public in the coming years.
So you mentioned Oregon, and yeah. In terms of public entities, people kind of shy away from Washington, Oregon, Colorado because the markets have become so fragmented. Do you still shy away from that, or do you think it more so proves that if you're generating positive cash flow, that it actually shows that you're a stronger operator than a lot of other options out there?
Yeah, I mean, if you can succeed in Colorado, California, and Oregon, then you are really competitive. I think it's Jason Wild that says like that, the states of east of the Mississippi are like the JV league. And then like to like really win in California or these other markets that are a little bit more mature, you have to really, really be on your A game to compete. It's very competitive. And, but what's encouraging is some people have hypothesized that, you unlock the growth in this industry with opening new states. Yes, that's true. Look at Illinois. Overnight, that state just became a monster. But what is encouraging to me, going back to my Headset data, is looking at Colorado. It grew 20% year over year last year. And that's a market that's been open for 6 years. And so to me, it's just demonstrating that we still have enormous growth potential in these markets, even if they've been around for a while. And if you're a competitive operator and you're efficient in the way that you've scaled your business, it's huge market share to capture.
What were lockdowns? Sorry, Steve. What were lockdowns like in Colorado over the course of 2020? Would there be some traveling consumers that bought that up, or would it more so actually be genuine growth from the local population?
It's an excellent question, because when this all shut down and it was spring ski season that was impacted in Colorado, and we were like, oh man, this is gonna be painful. But no, I mean, considering that all of that tourism slowed way down to a trickle, and still that market saw 20% growth, that's organic. That's organic. Now, Las Vegas took a bath for a while. That was rough, but like that is all.
Vegas is a tourist center, so it's more to be expected, right?
Exactly. It's a cross section of America. That's why CBS does all their testing there, because you get everybody there from everywhere in the United States. So yeah, but Colorado is like, I think that's actually for us, when we saw the final numbers, we were like, oh, wow. So it grew at 20% in spite of what has gone on with a pandemic, reducing travel. So that's encouraging to me.
How do you guys handle it when you've invested in a company and you see that management or other parties involved with the company are doing something that appears to be sort of insider dealing? I assume that that's happened at least once to you guys, and obviously you can't talk specifically about names, but is that an issue? Like, because we're public markets guys, and we see a lot of stuff that effectively our website was built on, which is calling out the bad actors. Does that happen with any of the names you guys are in, or are you guys too involved for that to happen?
No, I mean, we've literally exited in the public markets. We'll sell a position for that because we have no interest in hanging around for that kind of behavior. And we have done it in the past, and you can, yep. Oh yeah. We've sold right out of positions for that very reason. So okay. We have no tolerance for it. I have no tolerance for it because the last thing this industry needs is another black eye, and it doesn't need, we don't need any more issues than we already have to overcome. Like I always say, we start at a lower point because of all of the years of the bad optics of the war on drugs, and so we've got to be up here.
What's your take on a lot of the states? They're putting in programs to try to help minorities get more involved. Are there any states that you think are doing it right that other states should look to as an example?
No, it's the worst. I mean, the way this industry has managed equity has been it's an unmitigated disaster. And the reason it's actually not the industry, it's the regulators. And the problem is that the regulators don't understand business. You cannot, you're telling me, no, I'm not in Ignite Cannabis. No way. No way, no how. And that's another good point. We also won't invest into a company because we know, like, even if we're like, yeah, we could play that, we could win on the upside on that, we still won't do it. We will not do it because we are managing other people's money. We are not interested in getting in fraudulent organizations. There's a lot of self-dealing in this industry. We won't touch it. So that's all I'll say about that. But I could name names all day long. But what were we talking about?
The minority programs.
Why
is it a disaster?
Yeah, well, because look, the regulators, they have good, like, well-laid plans of mice and men often fall by the wayside. They have good intentions. I believe that to be true. But I do think that what they forgot is that you need money. You need money to be able to do these things. And so the issues are that the way these programs run, they run too long, but you have to get the assets, like you have to get the stores, you have to like hold on to things, you got to jump through all these hoops. And a lot of the applicants don't have access to a ton of resources because of the way this world works and because of who controls the money. It's usually not flowing to minority applicants. And I think that it makes it untenable almost to participate in these programs because you can't just sit on a store waiting for it to get opened and just spending money that whole time if you don't have access to it. So there are no microloan programs that exist because we don't have banking regulations. So, Poseidon is actually working on putting together an ESG strategy that is going to be a lending structure for doing more of these kind of micro lending to help equity applicants with great partners to get set up. And so the way we would be doing that in cannabis, most interest rates that you get on short-term debt are like 12 to 15%. And sometimes you have warrants associated with those, but this would be more within a reasonable range. So it's not going to be it's a smaller structure and it's not going to be your biggest returning structure, but what it is an opportunity to invest in an ESG minded structure. And frankly, for those of us who keep saying we have to keep this in mind, we have to keep the equity applicants in mind, it's for us to put our money where our mouth is. And so we believe that that's one way to do it, because that's where we see it fall down, is that there isn't enough resources to get these applicants through to getting their doors open.
Okay. Well, Emily, you've been really generous with your time here. We really appreciate you coming on and sharing your experiences and thoughts. We always see it through a public market lens. So we don't always get to chat with people who get to see sort of what it looks like at the private level. And so we're kind of those retail investors that see it really late, and it's not always as palatable as it would be, I think, early. So just hearing your thoughts is really thought-provoking, and I hope that brings some value to our audience. Jay, it looked like you had something else there.
Yeah, so I've got one final question. You started off the interview saying that you came to cannabis because of the white space opportunity. Do you see that white space having shrank in the time since you started? Do you see it getting larger, or where are you planning on going next with Poseidon as a whole?
Yep. So we are launching our third fund, which is a early stage, or it's like a post-seed stage fund. And yeah, you're right. That's a good way to tie this up. So there's not the white space there once was, but what there is now is space that's ripe for disruption. So nothing in this industry is perfect yet. No one's won. And so we think we can invest in a new wave of early stage companies that could disrupt the space. And, frankly, if you don't have those guys running up from behind, the guys who have been kind of in the front could get complacent. So it's really good for the industry to have this constant pressure coming from behind of a new wave of companies who wants to try it, have a shot at doing it better. So that's what we're thinking about now, in addition to like a lending structure, as I was talking about. But
okay, well, thanks so much for joining us today. And for our viewers, we're not going to be covering Canadian small cap and micro cap news today because we had Emily on. We wanted to spend the full hour with her. Quick little disclaimer here. Nothing that we talk about is a buy or sell recommendation. It is for informational and entertainment purposes only. If you're looking for that sort of thing, please go see a licensed financial advisor. We thank everybody who took the time to join us today. You could have spent your last hour staring at any screen, any place in the world, but you chose to spend it with us, and that means a lot. We've got a lot of great guests coming on next week. We appreciate each and every one of you, and especially Emily, who took the time to join us today. All right, have a great weekend, everybody.